This is Alan Bush with the Daily Financial Forecast for Thursday, March 10th. Just coming up from the trading floor, a lot of people there talking about the European Central Bank's meeting today and the stimulus that they are adding to their banking system. The ECB is now expanding their quantitative easing program by approximately 33%, with QE now at 80 billion euros a month. Actually, that's starting in April. That's up from 60 billion. Also, they lowered all of their major interest rates. In fact, they are already in negative territory, and rates are now lowered even further. So that very stimulative to the global economy, of course, the Eurozone economy in particular, and it is very bullish for equity markets globally. Also, we did have some additional strength with the jobless claims report coming in at a very low number, suggesting that the U.S. economy is on track to recover. So that a secondary supportive factor, taking the S&P and the Dow both to new highs for the move. Longer term, still looks like higher in all of the major stock indices. Now, moving over to the currencies, on the announcement of the larger than expected stimulus program from the European Central Bank, the euro currency very quickly fell. It now has recovered since there is a lot of short covering, and it was extremely widely anticipated that the ECB would be adding more stimulus, although most analysts were not expecting this much stimulus. In any event, a lot of short covering coming in, taking the euro currency higher on the day now. By the same token, the dollar initially very strong on the ECB announcement, now coming off with long liquidation taking place. Longer term, though, we do feel that the main trend for the dollar is higher, and I would not be surprised to see a move back to, if not higher on the day, at least good recovery gains from where we are currently trading. Longer term, still looks like the euro is likely to come under some pressure, and the pound also weaker on ideas that there will be liquidation of long positions in the pound ahead of the June 23rd referendum for the UK to leave the European Union. Now, moving over to the interest rate futures markets, we are seeing the bonds a little bit higher, even though the ECB statement is inflationary, at least inflationary from a global point of view. So the bonds performing are relatively well. Probability of a rate increase at the March 16th meeting is still virtually zero, and the probability of a rate increase at the December meeting now moving up a little bit to 70%. Yesterday it was 67%. So good trading, everyone. And once again, remember, these are my opinions alone and are not the opinions of ADMIS or Archer Daniels Midland.